Hello and welcome. We are glad you're with us here today for our 2023 State of Identity Fraud webinar. I'm Sarah Hunter-Liskowski. I'm the Marketing Content and Communications Manager at AuthenticID. And it's no secret that fraud has been skyrocketing across all industries. So today we're looking at what you can expect in terms of both fraud threats in 2023, as well as emerging technologies that you can employ to future-proof your business against fraud. So I'll offer a bit of background and intros before we get started. If you're unfamiliar with AuthenticID, we provide the identity proofing technology to allow anyone to prove place and on any device. Driven by patented AI and machine learning technology, our 100% automated solution delivers 99% accuracy in counterfeit ID detection and biometric verification. Leading financial service firms, telecom companies, credit bureaus, and businesses worldwide have adopted AuthenticID's solution to mitigate fraud without sacrificing user experience. And we hope today's webinar offers you and your business a clear picture of what's on the horizon for fraud and cutting-edge technology. Our speakers today not only offer decades of experience, but a real clear picture for knowing what's next in both fraud and technology. Our first speaker is Amy Walraven, the president and founder of AuthenticID's, not AuthenticID, Turnkey Risk Solutions. That's our next speaker. Amy has over 25 years of expertise identifying, assessing, targeting, and resolving fraud, credit, and risk issues. She's developed and successfully implemented comprehensive business practices, scoring models, and clustering algorithms to detect first-party fraud schemes, including credit bust-outs, synthetic identities, and syndicated fraud activity throughout the customer lifecycle. She's a recognized subject matter expert in the industry and advises several government agencies and industry groups on managing the evolving fraud threats that industries are facing. For our second speaker, Blair Cohen, he is the founder and president of AuthenticID. As a dynamic technology entrepreneur with over 30 years of experience, Blair is future focused and can anticipate industry needs, identify pain points, and build systems to help improve their bottom line. Prior to turning his focus to solving the biggest challenge on earth, identity, Blair launched several other groundbreaking enterprises and pioneering technology products. Named by One World Identity as one of the 100 most influential identity experts globally, you can find his publications you can find his articles in publications like Fast Company, and he's frequently a speaker at industry conferences focused on identity, risk management, and information security. Each of our speakers will take us through fraud and technology trends, and we'll save some time for questions. So please add your questions in the chat area, and we'll be sure to get to them at the end of the presentation. So without further ado, Amy, the floor is yours.
She gets all the fun stuff.
Sorry. Thanks, everybody. I'm happy to be here. I'm getting that echo, Sarah.
All right.
Sorry. Just wanted to appreciate everybody's time, and yeah, we're going to cover a lot of stuff. Unfortunately for Blair, as he says, I get to cover the fun stuff, and he's going to cover, what we can do to kind of combat this. So I just want to kind of level set everybody and talk about really fraud is one of those things that's always going to be around. It's dynamic, it's constantly shifting and moving, and it's definitely on the rise. And Sarah, I can't advance the slides. Do you want to just do it? There we go. So there's a lot of different things that are causing fraud to go ahead and escalate. One of the big things that's really happening, and a lot of people are talking about it, is synthetic fraud or synthetic identity fraud. It's generally a newer term for some, but it's really something that's been around for quite a long time. I've been in this space, as Sarah said, about 25 years or so now. And it's something that we've been seeing since the late 90s, early 2000s. And in the best way to kind of define it, in the simplest way to define it, it's really, for synthetic identity fraud, it's really where it's a combination of personally identifiable information like name, address, date of birth, social security number in the US, that's used to be able to create a false persona or false identity to commit either a dishonest act or for either personal or financial gain. I had the privilege of working on a task force with or a focus group with the Federal Reserve Bank, and we're trying to, and this is kind of the definition that they came up with, or we came up with as a group, a public-private group, to really try to get an industry definition around synthetic identity fraud, because it's mentioned a lot of different ways in a lot of different institutions, and it doesn't have a common definition like a lot of other frauds do. So that's really the definition we're trying to make sure that people understand, is it is a combination of PII that creates a completely false persona, and it comes about in a couple different ways. It's very complex, so you can have things like what one of the terms that's common in the industry is a manufactured synthetic, where it's somebody who steals a real person's social security number, for example, and they can get that from a lot of different sources. They can socially engineer it. They can find it on the dark web after a data compromise. They can make it up, and it happens to be affiliated with somebody that's already existing and using it. And then they put a different name to it and an address they can control, and they actually, in essence, create a whole new entity or individual. Manipulated synthetics is another term that's around, and it's really where somebody like I'm not a fraudster, but an example would be if I decided to use different variations of my name or different variations of my social security number, similar enough that it's me, but different enough that it looks like it may be a different person. I can create multiple iterations instead of just one entity or one individual applying for or goods and products. I create multiple, so I'm getting access to more goods and services that maybe I have the ability to repay or I deserve, or for different purposes. Sometimes it's just kind of fraud for living. We see that a lot in undocumented communities where we're a credit-based society, and it's not necessarily to go ahead and defraud an institution, but it could be because they need the utility turned on, or they need to rent an apartment, or they need to get a job. We also see it all the way up through transnational organized criminal groups that are using it for funding sources. The statistic, AuthenticID did a survey recently, and about 53% of individuals report that they've had some level of their personal identifiable information compromised, which is a lot. There's been a lot of data breaches. There's been a lot of reasons for PII to be out there, so it isn't as hard to get to as it may once have been. Go ahead, next slide, Sarah. So another big one that's trending, and we're going to kind of cover that one because we'll cover synthetic as well as friendly fraud. And friendly fraud is kind of a misnomer, and if depending on which industry you talk to, it's not very friendly. So friendly fraud is kind of where you have an individual who could be a real person and is actually not claiming the card or not claiming the transaction. So in a friendly fraud situation, I make the transaction and then I dispute it. And say that it's not authorized or that I don't recognize it. In some instances, it can happen because maybe it's a mix-up with somebody in your family and your kid's on Xbox or on a gaming station and PlayStation, and they're purchasing things in-game because it's linked to the parent's credit card, and the transactions come under a name that they're not used to or not familiar with. You read the statement and you say, oh my gosh, this isn't my transaction, and you dispute it. Even though it was somebody in the household and it was authorized, it may not have been authorized by the individual who is the one who has to pay back that bill. We see a lot of times where there's a confusion with some of the things where they think that they're getting a free service, or they're not sure and they're getting kind of duped into purchasing things. And then we're also seeing situations where there's a malicious intent, and you have people that are trying to put high dollar items, and they're being purchased by the consumer, but they never actually receive it. So then, or it was damaged, and then they have to dispute it. So it comes in a lot of different forms. It comes in a lot of different sizes and variations, but it's really becoming problematic for institutions. And it's getting really, not getting as much attention potentially, but it's extremely expensive. So when these charges are being disputed, it actually costs about 86% of all the chargebacks they're saying is likely friendly fraud, and it's almost double the original purchase price. So it is something that is becoming more and more prolific, more and more commonplace, and there's a lot of reasons for that, and we'll get into some of those in just a few minutes. Next slide, Sarah. So which industries are getting hit the hardest by this fraud? So synthetics there, opportunistic fraud, all the industries are kind of facing a kind of new paradigm of fraud, or different levels of exploit of fraud. One of the first ones that everybody thinks about, next slide, is the financial services sector. This is where it's probably the maturity curve on especially synthetic identity fraud is kind of further down the path than maybe some of the industries. Banking institutions have always been kind of prepared for fraud. That's where the money is. That's where the fraudsters tend to go. But we're seeing that there's been because of the digitization and the new opportunities for customers, there's a lot of new opportunities. It's gotten very convenient for customers to do things remotely and through digital channels. It's become, and because those channels are anonymized, it's become very, very convenient for fraudsters to also be able to exploit the digitization and be able to use those anonymous channels to be able to commit the fraud. So the fraud attempts are going way up. It's over 200% increase in 2021. And about 76% of financial institutions are reporting that their accounts are being opened via the digital channel. So when you go again into a remote channel, you create a much bigger surface area for the fraud to exist, because you're losing some of that face-to-face contact that's getting less and less. And so it's much easier for the fraudsters to be able to stay anonymous and kind of moving into those channels. We're seeing the synthetic identity fraud's a big one, card not present, opportunistic fraud, or the friendly fraud with the chargebacks. We're seeing a lot of the bot attacks, the cryptocurrency wallets, and the fake exchanges that are out there. So there's a lot of different ways the financial services sector is being victimized. Another big one, the next one, Sarah, is telecom. Now, telecom customers, they're using their devices. A lot of times now, people don't have, a remote access device. Most digital services and most banking operations are done through people's phones. So now that you have not as much security, software security on the phone, those devices are becoming more and more compromised. And you have a lot of institutions that are realizing, or a lot of fraudsters that are realizing, okay, if I compromise that phone, I have direct access now to banking relationships or different things, because that's how most people are transacting with their device. There's a lot of SIM swap, account takeover, subscription fraud. We're seeing a lot in the telco space too on the synthetic identity front, where synthetic identities will go in and they'll start a new account, a family plan or a business plan, get the handsets, and then resell them. So there's a lot of different ways each of these industries are being targeted, and it's just a matter of what is the purpose of the fraud by the fraudster, which way they're going to be attacked, but there's no lack of opportunity. Next one, Sarah.
Before you click on to the next slide, I want to chime in a little bit on telecom. We are seeing a lot of this. Just one of the United States telecoms so far has seen over 100,000 fake credentials issued to them, and they've calculated the savings. So far, I think it was through September 15th of this year, at $260 million, and that's just one telco. So keep going, Amy. Didn't want to interrupt.
Right. Oh, no, that's fine. Right. And that's again, that's just because of the value of those handsets, right? The United States gets the first generation, and a lot of the other countries in other parts of the world are multiple generations behind. So they're very, very, very easy to convert to cash, either domestically or overseas. So there's a lot of fraud in that space. The government sector is another one that a lot of people don't think about. I think the pandemic really started to shed a lot of light on exactly how vulnerable some of those programs can be. So the PPP program, the economic or idle injury disaster loan, unemployment insurance, those were benefit programs to be able to kind of help us during that and help citizens through that very, very difficult economic time. And they're going back through now, and they're looking at the fraud numbers of those, and the estimated fraud numbers are staggering. So earlier in the financial services sector, they're estimating is about $48 billion is what they suspect to be that low of fraud for synthetic. In the government space, just in the pandemic programs alone, those 3 pandemic programs alone, it was $80 billion in PPP that they think went to fraud, $90 billion in the unemployment programs, and potentially $80 billion in disaster relief for the idle programs. When you add all that up, that's $250 billion for just the pandemic relief programs. It's not any other segment of the government. And that's more than 5 times what they're estimating in the financial services sector total. So that there's a huge opportunity or a huge level of threat and exposure in other sectors beyond the financial services, and the government tends to be one of those. Next slide, Sarah. Last time, what we're going to cover for verticals today is not the only ones that are being targeted and seeing an uptick in fraud is the insurance frauds are based. There's a lot happening. And again, a lot of it goes to digitization. As you get more and more, you don't, like if you're dealing with personal injury or you're dealing with auto insurance and auto accidents, now you have a way to take a picture of the accident and send that information in, and the claims process and the assessment process and the investigative process is all going remote. So we're seeing a lot of fraud move into those spaces where they're using the same vehicles over and over. They don't actually have somebody who comes out and inspects the vehicle because you can take the picture and report it. So there's a lot of different ways the fraud is happening in the insurance space. When we think about auto insurance too, in cases where synthetics could go and victimize the financial services sector by getting out auto loans, taking those cars off the lot, then putting them on a shipping container and selling them overseas for multiple times their value. They don't make, the financial services sector loses money, but the insurance sector loses money too, because in order to drive off the lot, you have to have insurance. So then what happens is when they do take those cars and either chop them up or ship them, then they claim that the car was stolen. So they're making an insurance claim too. So it's a way for, and we're starting to see a lot of the different frauds really bleed together. So when you're seeing stuff happening in the insurance space, it does create an issue in the financial services sector too. So if insurance fraud happens and a check is cut or a benefit is paid out, that typically gets deposited into a banking relationship or a banking account. So none of these are actually siloed. They might be completely different industries, but the fraud is really bleeding across multiple segments, multiple sectors, and an exposure risk in one can easily become an exposure risk for others just because they're all kind of tied together. So now we know kind of the verticals. What do we know about who's doing this? So really, identity theft isn't new. We talked a lot about first-party fraud. Identity theft is more third-party fraud where the customer is the victim. That's on the rise too. Again, because there's so much information out there, there's so many different ways for information to be obtained, either through conventional tactics that most people have seen, creating your identity, taking over an existing identity, impersonating somebody. What are the groups that are doing it? And really trying to understand the rationale and the motives can really help to set an institution up to be able to defend against it. So you have different echelons or different types of identity thieves or cyber criminals out there. Some are sole operators that really just, this is what they do. They're finding a lot of ways to do that just as extra income or what they consider a side hustle. Hey, I have a regular job, but I'm going to supplement my income this, and I found a way to, there's so much information out on social media. I can find out where you went to school, and I can find out if your profile isn't closed, and you post a lot of personal information, and you share a lot of information. It's not hard for individuals to just kind of scour through that vault of data that you put out there. It hasn't even been compromised. You're sharing it willingly to figure out what might be your out of wallet questions, or you see something like a throwback Thursday, I'm going to date myself out on Facebook. And it's like, take a picture of yourself in front of your first car. Well, if you know anything about out of wallet questions, a lot of times they ask, what is the make, model, or color of your first car? So a lot of your friends probably aren't asking you to take a picture of your first car, participate in, hey, I want to get to know you better, and tell me all these different questions, like, do you have tattoos? Or But if you go back and start looking at those surveys and some of those questionnaires, you'll start to realize, hey, those look a lot of like out of wallet questions or knowledge-based authentication questions that probably, I know I work, a lot of people work, don't have time to sit down and write 50 random questions that I'm going to ask my friends and see who will participate because it's fun. And yeah, it seems innocent, but there's usually a bigger motive behind it. And that's just a different way to fish. There's also, the middle level of group of players, and then you get into organized criminal networks. And organized criminal networks run a host of different things. We have street gangs that have gone into prison that have figured out or been taught how to do white collar crime. So they realize it's much easier to do that and much safer to do that versus, deal with, getting shot over drugs on the corner. White collar crime doesn't come with the same level of consequences. Then you have, organized criminal groups that are using this kind of fraud to fund other parts of their networks. And you go all the way up through nation state kind of organized nation type of activity. So it runs the gamut, and we've seen that across what's happening in the financial services sector. We're seeing that kind of stuff in each of the different verticals we talked about. We're seeing those kinds of attacks in the government sector. So the threats are out there, and they're being adapted by a lot of different groups. So before in the past, we did not see, and I'll date myself again, we did not see the same level of people getting involved. It was usually, a lot of the organized criminal groups, a lot of the different ethnic groups, You had your check kiting schemes, you had your counterfeiting schemes, you had your data compromise schemes, and now we're seeing that a lot of different people have realized the financial gain and the limit of whether or not there's really a lot of consequence. So we're seeing a lot more people move into this space. We know that there's a lot of things that people are doing. Again, I talked about, you know, the gathering stuff from social engineering on the social media sites, and there's still the phishing and the regular attacks that you get through email. But what we're really starting to see on social media, beyond just, you know, the traditional ways, the romance schemes and things like that, we're really seeing how social media is being weaponized to be able to create almost like a multi-level marketing set of schemes, where you've got this way for influencers. People go out there, they can get to you through TikTok, it can be catchy, it'll trend, it'll hit Twitter, it'll go on Craigslist. There's a lot of different platforms out there, but the more focus, the more attention you get, the more followers or subscribers you have, now you can actually get endorsements. You can get all kinds of compensation for your customer base. And what these guys are doing is, for a fee, they'll create a TikTok or they'll create something that's catchy. It'll start to get a lot of buzz, and they'll start to educate people on how to commit this fraud, and they'll charge them a fee. So they'll go into direct messaging, they'll go into offline channels that are more secure once they get people's interest. And then they'll start to teach them how to do it. They'll show people, and then for a fee, they'll be able to do that. And then the more people they recruit and bring to the site, they'll start to get, you know, compensated too. So we're really starting to see them kind of organize on social media, and that's why I think we're seeing the biggest shift in the acceleration for some of the synthetics, because now it's being taught for a fee on social media and being recruited through social media. And the same thing with friendly fraud and opportunistic fraud. Again, these people have found a way to be able to turn their scams and their schemes into a revenue opportunity for them and reach a very, very wide audience. So in the past, everybody talked about the information that was shared on the dark web and you know, where a lot of these data compromises went and where a lot of this fraud was being driven was from the dark web. That is true, but the level of sophistication you need as an end user to get down into those forums and to navigate the dark web is much different than, do you know how to get into a TikTok feed? So when the way they're using social media now is they're reaching a much bigger audience that it's not the same kind of criminal. And we're seeing a lot more regular average people that, especially because of the pandemic, maybe they got displaced, maybe they just, you know, don't want to go back to making minimum wage an hour, and they see these opportunities to be able to really exploit a lot of these programs. When you're doing especially synthetic fraud, because there's no true victim, they're not impersonating Amy, I'm not impersonating Blair, I'm not impersonating Sarah, I'm creating this whole new persona that doesn't exist. The only victim is the institution or the business or you know, the merchant that gets involved or the bank that gets involved and uses these benefits and products. So really, it's a victimless crime, which is different, I think, with the way they're kind of, it's not, I'm targeting, you know, Blair or Sarah. I'm creating this whole thing, and the only people that are going to lose money is, oh, the government, or, oh, you know, that bank, or, oh, that insurance company, or, oh, that telco company. And those phones are $1,400, so they can stand to lose the money. So they're not seeing it the same way, and I think that's really played a big role in why we're seeing the levels of increase that we're seeing and the types of threat vectors that we have. Next slide, Sarah. So really the goal of why they're doing this, and it really comes down to, or what they're doing, they can open new accounts, they can use it to conduct scams, they can make purchases, they can take over accounts, they can make money selling the data. It's really it's dealer's choice for them. Whatever information they have, they can find a way to either leverage it for themselves, they can find a way to commoditize it and be able to exploit or gain an institution from it. They can use it for personal gain, they can use it for profit, they can deal it. So we're seeing now some people are creating synthetic identities, not using the identities, and basically becoming an identity broker and just selling mature identities. So it limits their level of exposure to potential you know, law enforcement action or any kind of you know, threat of being caught while they're still making a lot of money. So I think there's a lot of different ways these are being used, and a lot of different ways identity fraud is starting to really perpetrate and kind of permeate the infrastructure and all the different programs that are out there and all the different industries. And I really think there's a lot happening that makes it a lot easier than it has in the past. So with that being said, that's kind of where we are. It's not all doom and gloom. Blair is now going to talk to us about what can we do, how can we defend ourselves against this, and how can institutions protect themselves better.
It sounds like a lot of gloom and doom, Amy. It sounds pretty precarious out there. But yeah, I'm going to try to give people a little bit of hope and know that there are some tools out there and we're not totally defenseless. When you start talking about organized crime and nation state, those are pretty sophisticated attacks. So we need to up our game, folks. We can't stay with the old static approaches to combating this. And what I took home from Amy's presentation is the vast majority of fraud is identity related. So it's either first party fraud, it's third party fraud, or it's a synthetic identity. But the vast majority of all of this fraud, and it's hundreds of billions of dollars annually, is identity related. So what does that mean? It means that we need to get identity right. But unfortunately, there's this movement out there today where everybody wants a consumer to have this perfect experience, this frictionless experience. We don't want to introduce any friction because we might lose a customer. So there are basically zero obstacles for me taking over Amy's account or me creating a synthetic identity, or just to call up the telco at the end of the month and say, I didn't do it, because they have no way to prove that I did or didn't do it. So there is no one silver bullet out there. Certainly, the old way of doing things, using one-time passwords, she said her phone number is XYZ, let me send a PIN code to that, and if she can answer that, it must really be Amy. Well, that doesn't work because it's easy to take over a phone. And it certainly doesn't work to use KBA, and it appalls me. NIST has been putting out guidance since 2016 to say that no enterprise should be using knowledge-based authentication to prove identity any longer. Nevertheless, a lot of companies still do. The make and model of your first car, your cat's name, the amount of your mortgage payment last month. Think about it, folks. It's all data. And all of our data has been breached so many times. Everybody knows the answers to those questions better than you do. I think the recent survey said that about 67% of real people fail KBA. The questions have become so obscure to deter the fraudsters that real people can't remember the answer to these things. So it's not only not effective, but it also creates this friction that everybody's trying to avoid. Nobody wants to look like a fool, not be able to answer the make and model of your first car or the amount of your mortgage last month. But the fraudsters nail this. Most of us real people can't. So what do? As I said, there isn't any one silver bullet. It really takes a layered approach. You need to add a bunch of different signals up front in order to get that identity, the proofing of that identity, correct up front in the very first transaction that you're dealing with that consumer. And I think that the National Institute of Standards and Technology, NIST, as most of us know, has put together a pretty good schema for getting that right off the bat. So you've got IAL2, so Identity Assurance Level 1, 2, and 3. And if you look at the companies that have adopted this IAL2 approach that's endorsed by NIST, companies like ID.me, for example, that saved the US government over $400 billion just last year alone. It works, folks. We can't work with just phone number validation, email validation, or some of these other tools. It's the combination of all those different signals that really prevent the fraud and make the bar much, much higher. I'm not saying that a nation state can't defeat even 863-3, but it certainly raises the bar considerably higher. It makes it much more difficult for any fraudster to defeat a system. So the first thing that I would say is, Amy touched on this earlier, is bots are on the rise, folks. Make sure that you're dealing with a human and not a bot right off the bat. Have really good user behavior analytics right up front and make sure that it isn't, a bot that's filling out that form. It's a real human. But that in and of itself isn't enough, because the fraudsters have realized that we've gotten pretty good at detecting bots. So they built these farms of humans in all these countries that look like a real human when they're filling out these forms. So you can't rely just on UBA, but it's an excellent tool to begin with. What are some of the other tools that people are suggesting that you use in order to get the identity right? I'm going to go through a few of them. First one is phone. Phone's a pretty sticky factor. Most of us have had our same phone number for a considerable amount of time. So if we're able to validate, if somebody asserts that their phone number is 770-3355-114, and I can bounce that up against the issuer of that device and see that my name, the name that I'm asserting to acquire this service or perform this transaction, matches what's on the subscriber records, that's pretty good. If that phone number is 15 years old, it gives you pretty strong confidence that you're really dealing with the right person. It's not enough, but it's strong confidence. On the other hand, if that phone number is 15 minutes old, or it's a VoIP phone, a Google Analytics phone that you can dial up and create a new one right off the bat, that's pretty risky. So look at that piece. Email address is kind of the same as phone. They're pretty sticky. You know, a lot of us have had the same email address for 15, 20, 25 years. I'm dating myself too, Amy, sorry about that. So if the email address was created, 30 days ago, that's pretty risky. That's kind of abnormal, that's unusual. If it's been a 20-year-old email address, pretty strong confidence in that one. The other thing that people are looking at is behavioral analytics. And I've done some research on this recently, and it's pretty amazing how this field has evolved. Today, with behavioral analytics, they're actually able to perform one-to-many. So just by the way that you interact with that website, just by the way that you hold your device, that you press your device, the cadence with which you press your keys, they can actually tell if that's me, or that's Amy, or that's Sarah, and they can do this with one-to-many. So if there's a billion people that have been enrolled, we can actually tell you using the more advanced behavioral analytics who that 1 in a billion person is, just by the way that they interact. I think the thing that we're seeing that's the highest bar for fraudsters to get through and jump over the gate, though, is document authentication and face matching. It's really, really, really hard to create a fake ID. Especially for the advanced companies, kind of like the advanced behavioral analytic companies that have come a long way and can now do this one-to-many. Document authentication also has come an awful long way. It used to be the older technologies, and some of those still exist out there. They were kind of doing this in an antiquated way. They weren't using AI, they weren't using ML, they weren't continually learning. It was more of a heuristic check. So are the security features that we expect to see on this identity document, do they exist? Do I get the right color response from them? Are they precisely placed on the document? That works, but they're subject and vulnerable to simple things like, let me just switch out the headshot on this ID. If you're only looking at security features on a document and patterns that exist, but not really doing a deep dive and examination of the headshot that's on that identity document, you're certainly vulnerable. The other thing that a lot of the older, less advanced document authentication technologies are vulnerable to is manipulation of the data on the document, the biographic information. So if you use the same font and get the data all in the right space on the document, it's very likely that you're going to be able to change an address, change a date of birth, change a driver's license number, and the older technologies won't be able to get that. The newer technologies, like those offered by AuthenticID, we go deep. I mean, we're looking at everything. We're looking at the substrate. How is this document actually created? Are all 8 layers of the document actually existent? We look at the way that a person actually images their ID, the way that a person images their face. There are certain ways that real people go through this process, and there are certain ways that bad people go through this process. We're able to identify the good and the bad people as they go through the process of imaging their ID and imaging their face in a pretty reliable fashion. they get a lot of things wrong. So we analyze all the text. We see a lot of times where they'll have an expiration date on a document that isn't valid. You know, if this document was issued 2 years ago, the document's only valid for 4 years, and they'll have an expiration date on the document 8 years from now. You know, things like that are fairly simple, but we analyzed, and all the document authentication vendors analyze all the text and crunch that in a variety of different ways just to do a sanity check and make sure it's real. And this is pretty hard for the fraudsters to get right. There's lots of check digits, check sums, encrypted data and barcodes that are difficult for folks to get correct. Invalid barcode data, that's another. There are codes embedded and encrypted within that barcode that would be nearly impossible for a fraudster or a bad actor to get right. It actually has to come from the issuing authority. So that's another way that we're able to detect those things. Is this a picture of a real ID? Is the document actually present and visible in the screen? Or did they take a picture of an ID that was created digitally off of their computer screen? Did they print it out to paper and laminate it? So this material analysis is super important. And obviously we have to be, to protect against any sort of digital manipulation of that document. Headshots, biographic information, you've got to make sure that all that's intact. And I'm not going to go into any of the details. We're not going to try to reveal our playbook to all the fraudsters today. But just be assured that good document authentication companies do everything here and then quite a bit more. And document authentication is really evolving, and it's evolving pretty quickly. In the past, when we started this company 10 years ago, most all of the identity documents out there were physical documents. They were plastic documents. They were DLs or passports. But today, we're seeing this digitization of identity documents. So we're giving a few more tools to be able to validate the authenticity of that document. Many identity documents today have chips in them. Well, we're able to inspect the chip within that are cryptographically signed and detect any sort of manipulation. We're starting to see things like mobile driver's licenses that have standards, the ISO 1813-5 standard. And in that case, we're actually hitting the issuer of the document and validating both the biographic information, but importantly, we're also validating the biometric information. Is that really the right person that this document was issued to? So we're seeing this move to system of record checks beyond just the physical examination and forensic examination of a physical document. But speaking of system of record checks, here in the US, you have the ability through an entity called AMBA. It's a consortium of the motor vehicle industries. About 36 different states participate. And I'm not really recommending AMBA, even though it is a system of record check. It's only an attribute validation, so there's no biographic information. I can tell you firsthand that we've had this combination installed in a number of the big banks, and we detect a ton of counterfeit documents, but all the data on those documents is validated from AMBA. So what that means is fraudsters are stealing good data. They get the right address, they get the right name, they get the right DOP, they get the right driver's license number. So with system of record checks, I highly recommend that you include the biometric attribute validation, not just a biographic validation. So what does that allow you to do? If we put all these steps together and we really know who you are, we can digitize your identity and then use something that's pretty much immutable from there, and that's biometrics to be able to authenticate any future transaction. So you only have to go through this IAL2 process one time. From there on, it can be very convenient. It can be as convenient as opening up your iPhone, which we all do today with just our face. Same thing can happen in any risk-based transaction, whether that be a bank or a telco. So biometrics are awesome. I'm a big believer. I think that's the future of authentication. But a couple things to get right here. First of all, you've got to use the right algorithms. There are some poor algorithms out there that haven't been properly trained. They didn't use the right data sets. On the other hand, there are some fantastic algorithms where the error rate is non-existent. The differential in their matching from a person, whether they're old, young, male, female, dark skin, light skin, there used to be big discrepancies across all those different demographics. Those have kind of gone away. Today, all the top performing algorithms, it doesn't matter whether you're old, young, male, female, dark skin, light skin, the matching accuracy is pretty much exactly the same across all those different demographics. So biometrics are great, but they're all pretty vulnerable. Just in this time that we've been on this, somebody could have recorded enough little snippets of my voice. Using today's technology, you could actually replay my voice. You could type something into your computer and it'll come out of your computer sounding exactly like me. I speak a fair amount. It wouldn't be hard to find a picture of me out on the internet or video of me. So it's super important that we employ really strong liveness and genuine presence detection capability when we use biometrics. We need to make sure that there's no spoofing going on. That's really a live face, really a live voice. It's not some sort of replica or emulation of my voice or face that's being replayed in order to gain access to an account. And the other thing that I'll talk about biometrics, Amy, you talked about first-party fraud a fair amount. You know, that kind of goes away with the use of biometrics. You're no longer going to be able to call up at the end of the month and say, I didn't do it, because we now have a date and a timestamp, and we've got your real face with liveness detection applied. So we know it was a real live human, and it was you, by the way, that performed that transaction. So you can no longer dispute those transactions. We're going to know that it was the daughter, that it was the wife, or it was really the subscriber to the account. So I'll kind of stop there for a moment and see if we have some questions.
We do have one question.
You to go, Sarah, if you want.
No. We had one that's actually directly related to what you were just talking about, which is, does AMBA check the system of record for passports as well?
They don't. So AMBA is just the state DMVs. And today, I think there are about 39 different states that have signed up for it. However, some have serious limitations. States like California can only be accessed if you're the Social Security Administration. I forget how many residents live in California, but it's a pretty significant portion of the US population. The same applies in New York. So again, a pretty populous state where access to AMBA just doesn't exist.
Excellent. Well, Blair, if that concludes you, I'll provide just some interesting findings from our most recent fraud research report here. So let me move forward here. AuthenticID conducted a survey very recently to gain a little bit of insight to what consumers are experiencing, and more of this data will be in the report, but really just piggybacking on the topics that Amy and Blair are talking about today. I think some of this is interesting to know, is getting that clear picture of who those fraudsters are, but also a little bit of data on the where and the when here in terms of the nationwide impact and kind of the highest levels of fraud we're seeing in states across the United States, but also the timing. Those evening hours seem to be the most widespread times for fraudsters to attack.
They're not early risers, that's for sure.
They're not. Very clearly not early risers.
States I just mentioned, California and New York, they're the top 5 here, and those aren't available through AMBA.
In addition to also talk a little bit more about what Amy was seeing, and this kind of comes through in this survey as well, is really seeing that for our respondents in the survey, many of them are experiencing account hacks in their personal banking. And obviously, as the use of digital banking increases, we're seeing that fraud rate increase as well, in addition to credit card fraud, And then in third, online shopping fraud, which, we're obviously in that time of year where folks are doing a lot of shopping. So obviously those threats are high as well. And we also did a bit of research on, how concerned are folks about their identity, and knowing that a lot of them have experienced this type of fraud, especially within the past year, and seeing the results on the bottom of your screen in terms of a lot of the apps and services people are using, and really looking for more protection, especially on the consumer side as fraud rates increase as well.
Hey, Sarah, can I touch just on one thing real quick if you go back to the other slide? There's a piece of fraud that we really haven't discussed, and it's relatively new. I've been in the employment and identity business for some 30 years. And it used to be when somebody applied for a job, it was very rare that they weren't who they said they were. There was a recent study that was just conducted, I think it just came out last month, and it's very alarming. When you start thinking about these other types of fraud, what's the risk? In general, it's financial. It's just money, right? Which we can all recover from, most of us can. I mean, it's terrible, nobody wants to have any financial fraud. But the fraud that I'm seeing that's on the biggest rise that is really, really, really concerning is employment fraud. It turns out that 7.9% of people that applied for jobs in the past few months were not who they said they were. So the impact there, if you think about somebody saying, I'm a systems engineer and I'm going to go work at AT&T, think about the impact and what could happen if a fraudster, an organized criminal, gets employed in that job, the power that they have, the power that they would have, working in a bank. That's pretty scary stuff. So didn't want to interrupt, but I thought it was a pretty important piece of fraud that we really hadn't talked about yet.
Absolutely. And moving to the next slide, as Blair mentioned, and we've discussed throughout this presentation, both businesses and consumers are really seeing that heavy financial loss, and also quite a long time to recover. This not only are we seeing fraud rates and impacts across the board, but that it is taking consumers a bit of time to get their money back, which, as Blair mentioned, is not a fun process for folks to go to. And in addition, we're seeing a lot of interesting numbers in terms of what people expect in terms of their safety as related to user experience. While people are definitely looking for the quick, seamless onboarding and re-authentication and being able to make purchases, use their services with ease, they are definitely looking to ensure the company they're working with is has their best interests in mind and ensuring that they're using the best practices that we've mentioned. So clearly a lot on consumers' mind, unsurprisingly, as we head into 2023. So those are just some findings that we had. Like I mentioned, more of those are in our 2023 credit report. And we're looking at the fraud report and kind of the impact on that. And so we do want to give a couple more questions. A couple have come in. So first for Amy, and I think related to kind of the finance industries, with the new alt payment technology available with peer-to-peer, are there other fraud trends that are connected to these new payments, peer-to-peer technologies that people are using that you're seeing in the financial industry?
Absolutely. I think now that you can do person-to-person payments or peer-to-peer payments, I think it's made it so much easier. And there's so many apps, right? So you've got so many different systems that can do it. You can go through Zelle or Venmo or Cash App, or there's more popping up every day. It creates an opportunity for people when you bring in things like social engineering and the scams, where you're actually convincing somebody that that is a valid product or this is a valid service, and they're going to go ahead and send this payment, and then they either don't get it isn't valid, it's completely fraud, there's nothing that's going to come to them, they're not going to get any goods or merchandise, and they're out that money, so then they go to dispute it. So we're seeing a ton of backlash for a lot of the scams, because people are getting scammed into pushing those payments, or we're making those payments via these different cash vehicles, and because it's coming from their debit account, it's their money. It's not like a credit card where in the past and credit card side, it's the bank's money, and there's zero fraud liability. That's out of your checking account. That's coming directly out of your account. So you're out that money until it can be replaced. And we're seeing a lot of the small banks and the credit unions and some of the other institutions where that fraud loss is becoming so much that they don't want to even accept or participate in that. There was a Wall Street Journal article 3 days ago where the small banks and credit unions are saying, we're not sure we can support this anymore just because of the loss exposure for them. Because if a customer is victimized or defrauded and they get scammed into sending one of those payments, it's up to the institution to make them whole. And they're just like, but they were complicit. So it becomes a much stickier situation where it is an authorized transaction, but the goods and services may not be valid, or they may not be happy with it. So it's creating a whole new set of constraints and set of issues, and a lot more opportunity for people to be defrauded. So I think there's a lot of scrutiny that's going to start. It's already starting to come into those different payment vehicles and peer-to-peer payments, but I think that is a very, very rapidly growing surface area, and it's another part of the way the systems are being leveraged to commit fraud, and fraudsters are using them.
Thank you. One question for Blair. So we still have some consumer and leadership wariness of biometrics. How can we address that so that we can actually employ it in our fraud prevention efforts?
I think it's education. If people knew how it was being used, it was really being done to protect them, that this isn't a government entity where you don't need to wear a tin hat. We're not going to take your face or your voice and reuse it in some nefarious fashion. It's really being done to protect you. And properly applied, it can do some amazing things. Like we've solved the bottom of the lake problem for one of the telcos, which could be a tremendous problem for many consumers today. You're out on a lake, your wallet and your phone are in that canoe, the canoe tips over. What are you going to do? Your phone and your wallet are both at the bottom of the lake. You have no ability to go get a new phone. Most people today can't live for an hour or 2 hours without their cell phone. Now I've got to go to the DMV, get a new document issued, wait 2 or 3 weeks for that to come to me before I can get a new phone. So if you look at the convenience that this solves and what it's doing for consumers, today you can walk into a telco and say, hey, I'm Blair. Really, I am. Here's my phone number. We'll take a picture of your face and know within a second that it really is me, and be able to hand me a phone without my wallet, without any other form of identification. So if people start to see the benefits that biometrics can provide, I think that wariness will go away. Unfortunately, there's been a lot of negative publicity about some of the bad algorithms out there and their poor performance. Don't listen to those old articles. They're old. Today's advanced algorithms really work quite well. And then from a leadership standpoint, it's all got to do with the regulatory environment. People are scared to death. They want to offer this convenience to their customers. They want to have this ability to fight first-party fraud, but they're scared to death of the lawsuits. And there have been some pretty poor pieces of legislation out there. I'll point to Portland and Baltimore. Right off the bat, I hope none of you folks are on this call, but really poorly crafted pieces of legislation that ban the use of biometrics altogether, even when it's being used for good. So education's really the key there, Sarah.
Thanks, Blair. One more question for Amy. Which industries, especially of those you've mentioned, have been the most affected by some of the new types of fraud you've mentioned?
I think they're equal opportunity offenders. I think the financial services sector, because they're further up the learning curve, have a much better set of defenses. They're still being targeted, they're still being attacked, but I don't think the success rate is as high, just because they recognize this problem for longer and are better equipped to start to defend against it, and starting to try to defend against it. I think the industries where it's still really being targeted and victimized are the ones that aren't as familiar with it. So when you go into insurance, when you go into healthcare, when you go into the government and the public sectors, they're just not used to dealing with organized wholesale fraud. You know, they're used to people exaggerating claims, or maybe they're not really that hurt, or, you know, maybe that's not really their income, or, you know, stretching, kind of exaggerating, you know, the situation, but not completely wholesale. It's fraud, doesn't exist. The entity doesn't exist. The individual doesn't exist. The business doesn't exist. Those transactions, those goods and services didn't exist. That exchange didn't happen. So they're not, in this, they just haven't come up that learning curve yet. And I think it comes back to what Blair just said. It's education, making sure they understand exactly the threats that exist out there, how sophisticated these groups can be, how easy that information is now being, you know, moved from the organized criminal groups to, like I said, on social media. People are being educated. Regular people that aren't part of the organized criminal group are going through and being recruited through these kind of multi-level marketing schemes, and starting to understand, hey, there's a you know, a real reason why I should commit this fraud, because it's really lucrative and there's very little risk to myself. So I think there's a lot of education that needs to happen in some of the industries that aren't bank or financial services related, just because they don't realize the level of exposure that they're facing. And that's why I think everybody's still being targeted, but I think they're still an easier target. And then the proceeds from those are still going to flow back to the banks, because again, if they're getting success in any of those, in the insurance and or a benefit program, and a payment is being cut, or a check is being cut to that individual and sent to that individual, it's getting deposited into the institution. So the banks are still going to be exposed, again, even if the fraud is happening somewhere else, because now it's the proceeds of fraud and they have a compliance and an AML issue, because they're facilitating the movement of fraudulent funds. So I think once people start to understand how interconnected these frauds tend to be, and the guys that are defrauding the banks are the same ones that are defrauding all of the other industries too, because they're like, if it works here, let's see how many other places it works. I think those institutions or those industry verticals have a better chance of understanding how to protect themselves better if they understand truly the level of sophistication that they're being attacked by.
Thanks. And we have two last questions. I want to make sure we can squeeze those in for our time is up. So the first one is, how can financial institutions effectively use both identity data, in terms of identity document data, and credit data to stop synthetics? For either of you.
Well, with synthetics, I mean, as Amy said, it's really not a real person. It's a person that's taken bits and pieces of somebody else's identity and created this whole new synthetic identity. How do you use that, though? You're going to be able to get through on that specific transaction, but it's going to be very, very difficult for you to go down to your local DMV and assert all this synthetic information, because with Real ID, we're validating birth certificates. You know, it's a much validating social security numbers. It's a much higher bar for a person, for a synthetic, to go to a DMV and get a real document issued. So employing advanced document authentication technology will allow you to detect those very sophisticated counterfeit documents and mitigate some of that synthetic risk. Amy, you're welcome to add on to that.
Yeah, I think it comes down to the combination of the two, right? Because if you just look at the documents, that's one thing. And if you just look at the history that they've created, that's another thing. I think it's when you look at them in conjunction with one another, and we stop siloing the fact that you know, you can have great credit, but you can still be a risk, or, you know, that's a good document and that's real, you know, that's what you've created, and you've gone to the DMV. You may not have given the DMV, if you don't go the Real ID route, right, and just get a state issued credential, because they're still accepted. You can still get an authentic document. I think it's really when it comes down to, we have to get better at making sure we're using layered controls and combining all of those different signals to be able to get a much more comprehensive view of the individual and the actions of that individual, or the history of that individual, and where they're represented and how they're represented. So I think that all of these different tools are great. I think they're even better when they're layered and working in conjunction with one another, because I think that's how we're going to be able to be much more effective in combating this, instead of taking these disparate signals and applying them kind of in a logical progression. If we start to look at them and say, okay, now if I look at them all in conjunction with one another, then I have a much more robust, much more accurate picture of the risk that this individual may be presenting to me. So I think it's a combination of looking at it, not in isolation, but looking at it in combination at the same time.
100% agree with that wholeheartedly. I mean, just a good phone number, a good email address, or a good identity document doesn't really mean anything. But when you apply all three and look at geo coordinates and you look at device reputation and combine all of those different signals, it really makes it difficult for the fraudster.
Last question, would you support a national ID for the US like some countries have rolled out for their citizens?
I'll take that one. I would support that. I don't think it's anything that's going to happen in the United States for at least another decade. Is my personal opinion.
I would agree. I think if we want to actually find a way to really combat this, we're going to need to, because all the inherent systems have already been compromised. So you're just building tools on a bad foundation from my perspective, or a weakened foundation. It's not necessarily bad, it's just compromised. So the more you layer on top of it, you still don't have the strength underneath of it that you really need. So I think if we move to that, we could really effectively combat a lot of this stuff. I agree with Blair. If you go back and look at EMD, if that's any indication of how the US would adapt something, it took the better part of at least a decade to get those chips in those cards. And it was to combat counterfeit, and it works at point of sale. It works really, really well. And a chip and pin works better than chip and signature. But if you go back and look at how long it took the US to adapt to that or adopt those, I agree with Blair. It's going to take some time. I think it's worthwhile, but I don't think it's on the near-term horizon, unfortunately.
Thanks to you both, and that concludes the questions. So that also concludes today's webinar. And just wanted to mention that as a registered guest of the webinar, you'll receive a recording of the webinar along with a copy of the actual 2023 State of Identity Fraud Report after the call concludes. So thank you to everybody for joining us. Thank you to Amy, and thank you to Blair for sharing just some tremendous insight with us for 2023. And have a great day. Thanks, everybody.
Thank you all.
Thank you. Have a good one.